Have you ever pondered over the evolution of money, how it has transitioned from barter to Bitcoin? Well, let's take a stroll down memory lane to the dawn of digital currency. Our journey begins in the late 1980s, a time when the internet was still in its infancy, and the concept of digital cash was merely a speck on the horizon. A man named David Chaum, a computer scientist and cryptographer, was the first to envision a world where money could exist in a purely digital form. Chaum's groundbreaking ideas laid the foundation for the digital currencies we see today. Chaum didn't just stop at the conceptual level. He went on to create the first cryptographic system known as DigiCash. This system was designed to facilitate secure, anonymous transactions, a feature that has remained a cornerstone of digital currencies. DigiCash was a pioneer, a beacon that illuminated the potential of digital currency. But like all pioneers, it was ahead of its time and ultimately failed to gain widespread acceptance. Yet, the seed of digital currency had been sown, and it was only a matter of time before it began to sprout. Fast forward to the late 1990s, and the world witnessed another significant leap in the evolution of digital currency. Enter PayPal, a company that revolutionized the way we send and receive money online. PayPal made it possible for anyone with an email address to transfer funds digitally, breaking down barriers and setting new standards for convenience and accessibility. But PayPal wasn't just about sending money, it was a proof of concept that demonstrated the viability of digital currency on a global scale. It showed the world that digital currency was more than just a theoretical concept. It was a practical, usable system that could change the way we think about money. The late 90s saw a significant leap in digital currency with the advent of PayPal, but this was just the beginning. As the new millennium dawned, so did a new era of digital currency, the age of cryptocurrency. This epoch commenced with a bang, the birth of Bitcoin in 2009. The world was introduced to a new form of currency, one that existed solely in the digital realm. This groundbreaking creation was authored by the enigmatic figure known as Satoshi Nakamoto. His, her, or their true identity remains a mystery, adding an intriguing layer of mystique to the inception of Bitcoin. This wasn't just a new form of money, it was a technological breakthrough. At the heart of Bitcoin and all that followed was a revolutionary concept: blockchain technology. Imagine a ledger, transparent and immutable, where each transaction is recorded and verified by a network of computers. This is the backbone of cryptocurrency, a decentralized system that eliminates the need for a middleman like banks or governments. The inception of Bitcoin paved the way for other digital currencies to emerge. Litecoin, often termed as silver to Bitcoin's gold, was one of the first to follow in 2011. Created by Charlie Lee, a former Google engineer, it offered faster transaction times and a different hashing algorithm. Not long after, in 2015, Ethereum was born. Its creator, Vitalik Buterin, didn't just want to create another currency, he wanted to build a platform for decentralized applications. Ethereum brought with it the concept of smart contracts, self-executing contracts with the terms directly written into code. This added a new dimension to the cryptocurrency world, further expanding its potential. And thus, the age of cryptocurrency blossomed, revolutionizing the financial world. From the mysterious birth of Bitcoin to the creation of a host of other digital currencies, each introducing new concepts and possibilities. The rise of cryptocurrency isn't just a financial phenomenon, it's a technological revolution, a new way of thinking about money, trust, and decentralization. With every passing year, cryptocurrency continues to evolve, shaping and being shaped by the world around it. But the story doesn't end with Bitcoin and altcoins, does it? As the cryptocurrency landscape matured, a new phenomenon was born: initial coin offerings, or ICOs. This innovative fundraising strategy allowed startups to bypass traditional early-stage investment and go straight to the public. Instead of issuing stocks, these companies issue their own digital currencies or tokens in exchange for a cryptocurrency like Bitcoin or Ethereum. Let's break down these tokens. There are two core types: utility tokens and security tokens. Utility tokens are essentially digital coupons that provide access to a product or service, while security tokens are digital assets that represent ownership in an underlying asset or company. Just like a share of stock, security tokens often come with voting rights and dividend payments. ICOs exploded in popularity, and by 2017, they were the talk of the town. It seemed like everyone had a token to sell and the public was eager to buy. But as with all gold rushes, this one attracted its share of prospectors and con artists. The market was flooded with fraudulent ICOs, leading to significant losses for many investors. This unchecked growth and subsequent fallout led to a shift in the landscape. Regulators stepped in and the ICO bubble burst, but from its ashes rose two new strategies: security token offerings, or STOs, and initial exchange offerings, or IEOs. STOs are essentially ICOs, but with increased regulatory oversight, while IEOs are ICOs managed by a cryptocurrency exchange on behalf of the startup. The rise and fall of ICOs, the evolution of tokens, and the shift towards STOs and IEOs have been a wild ride, but they've also been instrumental in shaping the digital currency landscape. They've pushed the boundaries of what's possible, challenged traditional finance, and opened up new avenues for innovation. The rise of ICOs and tokens marked another significant chapter in the evolution of digital currency. The story of digital currency, my friends, continues to unfold, and we're all here, watching, learning, and participating in this groundbreaking journey. Now that we've journeyed through the past, what does the future hold for digital currency? Let's start by peering into the crystal ball of financial innovation. On the horizon, we see the rise of decentralized finance, or DeFi as it's commonly known. DeFi is the idea that financial products can be built on top of blockchain networks, removing the need for intermediaries like banks. It's like taking the peer-to-peer concept of Bitcoin to the next level. We're talking about lending, borrowing, and even earning interest, all without a bank in sight. Next up, we have central bank digital currencies, or CBDCs. Imagine a world where each country's central bank issues its own digital currency, a world where transactions are faster, cheaper, and more transparent. CBDCs could be a game changer, bringing the benefits of digital currency to everyday life, while maintaining the stability and trust of traditional banking. However, let's not forget that with innovation comes challenges. The future of digital currency will undoubtedly face regulatory hurdles. Governments and regulatory bodies worldwide are grappling with how to regulate this new frontier while ensuring consumer protection and preventing illicit activities. But it's not all doom and gloom. These challenges present opportunities for solutions, like the development of regulatory technology, or RegTech, to ensure compliance and security in the digital currency space. The potential impact of digital currency on global economies and societies is vast. Imagine remittances without high fees, financial services for the unbanked, and a new era of transparency in transactions. The possibilities are endless. But let's be real. The future of digital currency is not set in stone. It's a dynamic, evolving landscape shaped by technology, regulation, and the needs and wants of society. It's a world that's as full of promise as it is of uncertainty. The future of digital currency is as exciting as it is uncertain. One thing is for sure, it's going to be a thrilling ride. So we've traversed the past, present, and potential future of digital currency. But what are the key takeaways from this journey? We've seen how the narrative of digital currency has unfolded over time. It started with the humble beginnings of digital cash, an idea that was once considered far-fetched and potentially dangerous. But the relentless pursuit of innovation turned it into a reality, making transactions quicker and more secure than ever before. From there, the world witnessed the rise of cryptocurrency, led by the revolutionary Bitcoin. This sparked an entirely new era of financial independence, pushing the boundaries of what we knew as traditional finance. It introduced a decentralized system where power was not concentrated in the hands of a few, but distributed among many. In the age of ICOs and tokens, we saw the democratization of investment opportunities. This period was marked by both success stories and cautionary tales, highlighting the importance of due diligence and risk assessment in the rapidly evolving digital currency landscape. As for the future, it holds immense promise and potential challenges. The evolution of digital currency is far from over. We expect to see further innovations in blockchain technology, increased regulatory scrutiny, and broader adoption of digital currencies by businesses and individuals alike. The impact of digital currency on society and the economy has been profound. It has democratized finance, provided new investment opportunities, and challenged traditional banking systems. But it's not all rosy. Issues such as volatility, regulatory concerns, and security risks are challenges that need to be addressed as we move forward. The opportunities, however, seem to outweigh the challenges. The potential for digital currency to contribute towards financial inclusion, economic growth, and even social change cannot be understated. No matter the changes that lie ahead, digital currency has undoubtedly left an indelible mark on the financial landscape, and it's here to stay.